Hey YouTube, Hill Country Husker. Appreciate you checking out my videos. If you subscribe to my channel, I want to say thanks for that also. Appreciate all the comments. Keep them coming. Thanks. Well, it looks like it's begun over there in Greece. I was listening on the news last night and watching it again this morning. Apparently the run on the nation's banks has begun, and the Greek populace is pulling their money out of the Greek banking system. Of course, now they're doing this to protect the value of their money, of their savings, what they have in their accounts. The reason is when Greece does exit the European Union, they will have to convert all their euros back to drachmas, and of course it will be at a great loss, going back from the euro back to the drachma. Looks like that country is in financial and political and probably social, civil upheaval. It's going to be sad to watch how this unfolds, but unfortunately it's happening. Why is this important? What happens over there does have an impact on what happens in this country. So this is something that I keep a close eye on. I try to learn about. I would suggest that everybody do the same thing. Don't keep your head in the sand, especially when it comes to global markets. We are all tied together now, whether we like it or not. That's just a reality. What happens over there impacts what happens over here. Now, it's kind of funny. Earlier this year, in an attempt to divert the financial meltdown, there was a fiscal compact that was created by a majority of the EU leaders. What this was designed to do was limit the European Union members' borrowing. They had set it at 3% of their economy's total annual output. And what's funny, this new deal is identical to the rules that were set up when the European Union first formed. The original member states set up that same 3% borrowing rule. Of course, after the Union was established, Italy and Germany were the first to break that 3% rule, soon followed by France. Spain, which is another EU member that you hear in the news quite a bit now, in trouble. Spain actually abided by the rules, abided by that 3% borrowing rule, and they didn't actually have to break that rule until the 2008 financial crisis, the global financial crisis. So, Spain actually did pretty good. Up until that point, Spain had the smallest debt relative to its economy of all the EU member states. So, but they're in just as much trouble as the others. And just so you know, kind of talking back on Greece, I think they came into the European Union in 2001. They never have abided by the membership rules. They have manipulated the statistics on their borrowing. They've done the cooking of the books to make them look good. And of course that worked until just a couple of years ago when they got caught at it, when their creative accounting methods became known. So it's no surprise that Greece will be the first member state to leave the European Union. Now, what really drove the European crisis wasn't that the governments had got themselves into debt with their spending, or that they didn't keep their borrowing in check. What it actually was, it was the private sector, the businesses, and the individual citizens that were taking out large loans. When the countries joined the European Union, their interest rates were significantly lowered. And of course now lower interest rates, this just fueled people and businesses going out and accumulating debt. Now, when you consider Spain, Italy, Germany, and France, their total governmental debt as a whole as a percentage of their annual output as a whole has remained relatively the same. It hasn't changed in the last decade. However, private sector debt has just literally exploded. So the governments weren't really to blame. It was really the people. You have to ask. So why isn't Germany in the same predicament as the other EU member states? Well, while those other countries were racking up their private sector debt and increasing their imports from other nations like Germany, Germany was setting itself up as the main producer and exporter for the rest of the zone. Now, Germany ended up exporting more than it was actually importing, and as a result of that, it piled up a huge surplus of cash. Now, in the end, Germany loaned a lot of this money back to the other EU countries. So Germany's big issue now is that they hold so much other member states' debt that should those nations default, the German citizens will have to absorb it, and Germany will have to take measures to protect itself. So that's how it's come back on Germany. Even though they did the right thing, looks like they're going to end up holding the bag. Now, another contributor to the overall crisis that a lot of times is overlooked has to do with the workers' wages. While most European Union countries were racking up the private sector debt, the workers' unions in those countries demanded higher wages for their workers. Meanwhile, in Germany, the workers' unions agreed to keep the wages stable and not increase them. Now, what this did, it just created it tipped the scale on the competitive scale in favor for Germany. So those countries in the European Union that had higher labor costs had a harder time exporting their goods, and a trade imbalance ensued. Now, after a decade of earning high wages, any austerity measures, high taxes, cutting benefits, anything like that is going to be met with a great amount of pushback from the citizens. Now, here's the dilemma, and I don't have the answer. I don't know if anybody does. With the 2008 financial crisis, government borrowing in the EU has increased, and it's catching up with the private sector debt. Spending, of course, is down across the European Union. Businesses and mortgage borrowers are underwater trying to pay back their debts, so they can't spend any more money. Exports in the Union remain uncompetitive, with the exception of Germany, and most EU countries are heavily in debt to Germany for the reasons that I explained earlier. Many of them are nearing default, such as Greece and Italy and Spain. They're near default on those loans. So in an effort to pay governmental debt, most countries are cutting their spending and raising taxes and putting forth the austerity measures that we're hearing so much about, which of course the populace is fighting back against with their protest and gathering in the streets and such that you've seen in Athens. Now here's the problem. When you cut spending, when a country cuts spending and impose these austerity measures, the recession within the community just gets that much deeper. Now this results in more unemployment, lower personal income. Lower personal income is going to result in the individual not spending as much money. The individual maybe defaulting on their loans, defaulting on their debt. Now, while lower wages might seem to indicate that you're increasing the country's competitive edge in the marketplace, well, that does little good if the whole marketplace that you're competing in is in itself in a recession. Now here's the problem if they don't cut spending. Simply put, you run the risk of a financial collapse. These countries that don't cut their spending will have to continue to borrow more and more money each year. Economic stagnation, entitlement spending, unemployment make these countries look too risky to other countries to do business with. These countries are going to lose confidence in trading with them. So pretty soon, other countries like Germany are not going to be lending, either because they themselves don't have the money or because they can't afford to. They've run out of money themselves because of a similar situation. Could be the money, could be lack of confidence. Either way, that's when the economy fails. And we find ourselves in this situation where there's the issues if you cut spending, there's the issues if you don't cut spending. So it's going to be interesting to see. I encourage everybody to pay close attention to what happens in Europe. Like I said earlier, the run on the banks in Greece has begun. Don't be surprised if you see this happening in other countries. I find this very interesting. I encourage everybody to get out there and learn about what's going on in the European Union. Just my thoughts. Hill Country Husker. Thanks.